Hey everyone, CryptoVatsik here. Thanks for joining. If you like this video, I'd really appreciate it if you supported the channel by liking and subscribing. You can also follow me on Twitter at CryptoVatsik for more frequent updates. Nothing of what you're about to see is considered financial advice. These are my opinions only. Okay, so today's going to be a short video on a few altcoins. So we're going to look at Link, we're going to look at MATIC, we're going to look at Cosmos, Atom, and we're just going to go through kind of currently what I'm seeing. So I shared this on my Twitter a couple days ago, or maybe a day ago now. This is what I was looking at for Link, and I haven't charted Link in quite some time actually, but I just thought it looked interesting right now and had some volatility versus some other coins that are just seeing less excitement right now at this point. So what we first saw here was basically, I know this chart is quite busy, but I'll just point with my cursor here and hopefully you can follow along. But basically we had this huge range develop when we made this significant move, made the macro low here down around $5.50, and then we made a really swing high back up to $9 and almost $9.30. And so basically what we were doing here when I saw this was we had this wick up here. This was our previous high, right? Up this drop, you can see this wick right here. Okay, so right up here, we came down, we set this range, right? We set this high, set this low. And then within that, actually, we kind of bounced around this. This is really the range that I drew out. Mid-range here with the dotted line. Here's the upper band. Here's the lower band. What we did was we broke up. We swept this high, so we took out this liquidity, and then we came right back down, and then we swept this low. So basically, that's just good to see that this liquidity has been tapped. It's been taken, and then we kind of just ranged within this range that I had drawn out here. So basically, between $7.80 and the low of like 560 area kind of thing. So we came back down. We started just ranging around the mid range, getting some decent volatility, hovering off this bullish order block in the green here. So you can see clearly there's some interest in here. This is a bullish order block because it's bouncing off of it as support. It is dipping down below, retesting this low. It had done that quite a few times, but really I had drawn this area as that ultimate order block. And I think that we're in a time of this market where rallies are going to be short term, right? So you might have some nice setups that you get, maybe an ascending triangle or something. You get a nice setup, you get a breakout, which is great, and you can play them, but it's really got to be a short term play in my opinion. So right now what we're seeing is, I've got this potential long here, right? But it's not I didn't enter this trade. It's just my thoughts of how you would trade Link right now, or how I would do it, at least at this point. And I had said, you could play it one of two ways. You could play it short or long. But if you're going to do a short term long, the shortest term long that I would be doing right now at this point was basically when I said, I'd be entering basically right now on a retest of this mid range, and just set your stop loss below the recent low, right? Just below the recent wick. It's an easy invalidation. And you could play it up to a short-term play of the upper band of this range here. Okay, so from the mid-range to the upper band here to the top of the range. Because I would expect it to be act as resistance, and this may actually fail and might not even reach it. I would expect this to at least come back down and test this mid-range again. Otherwise, if we were going to see a reclaim of the range high, this is how it would have played it, right? So basically, reclaim the range high. I would enter on a retest, a bullish retest of the range high here, stop loss below the range high in validation here once we made a low and have a retest, right? And then I'd be targeting this resistance, and on the way up, I'd probably take profit somewhere halfway, and then I'd ultimately be closing out the position near the range high on the top of the high here, which is clearly still acting as resistance. At that point, you'd have to reevaluate. If we smashed right through it, we'd be playing around with the 200-day moving average here coming down. As you can see, we'd be getting into that area again of some stronger resistance. So, it's a short-term play. It could smash through, have a retest, and go up and look pretty good. But that's just not my expectation. I think that we're still in a choppy, bearish market where they should be short-term plays if you're going to go long. And kind of the vice versa too with going short, right? So this is how I would have played it. If I'm going short, you might even, if you really have conviction that this is coming back down, you might run a short near the upper band, right? Have an invalidation above the upper band or above some of these wicks, and target the mid-range or the lower band of the range here, down here around $5.70. Okay, so what I would want to see, kind of my trigger here, is that if I wasn't certain that it's coming back down, I wouldn't be looking to short here. I'd want to short if we lose the mid-range here. And again, same theory, right? I'd get a bearish retest, short trigger, enter on that retest, invalidation stop loss right above, and then basically be targeting at least the bullish order block, which, could dip below here. So maybe, since we've dipped below a few times over here, you could target somewhere just below it, kind of thing. But essentially that'd be my take profit one, and then I'd be take profiting or closing out the position at ultimately the lows down here. And then again, you just have to see what the price action's doing and reevaluate from that point on, right? So, it's okay to have a bias, but I think that especially in a market like this, you need to be flexible. So, don't stick too much to, don't fall in love with a position. Don't think that you've bought the bottom, kind of thing. Don't think you've shorted the top, kind of thing. So, just play it as you see fit. So this is kind of both directions, and it's the classic, it could go up or go down. And, I get shit talk on TradingView for it. And, this is why you have to be objective. This is why you have to say, if I'm wrong, then what, right? If I'm wrong, then I will do this. If I'm wrong, I will cut my position. If I'm wrong, I will short. So that's my outlook. That's my perspective anyways. That's kind of it for right now. If you had taken this, you'd be in profit at the moment. And, we could see it come up and test this upper band, but again, I think it's short term, so we'll have to see how this plays out, and I'll update this on my TradingView and my Twitter as well once we get a clearer picture. Okay, next up we've got MATIC here. So essentially back here in May, midway through May, we had this range form, which could draw out like this kind of thing, and kind of broke down from here little by little until we had the failure breakdown below, obviously, which marked our macro low down here around 30, just around 34 cents area. And so I've just kept it drawn on here because I still think it has some significance. But essentially, then we got this bullish wedge here, which, actually at the time we didn't know if it was bullish, but it ended up being a bullish wedge here, right? And I had drawn this out a while ago as well, and I said, I'd be wanting to play where it gets a little bit tighter, and just actually smashed right through it. MATIC had a very strong move. Came up to a next area of resistance just off this wick, so this liquidity up here around just under $1. Obviously resistance, and then it started to form this ascending triangle here, right? Which was a really nice play, had a nice breakout, which ended up being a fake out. Okay, so that's why I say, you can get these bullish setups in a bear market, but they've got to be short term. You come right into resistance, and they usually fake right back down. Okay, so again, that's why I stress that short term bullish plays, or just change your focus and trying to look to short, right? So you could have said, okay, I'm going to look to short right into resistance or into these wicks, this liquidity over here, and then it would have been a nice play, obviously, but hindsight is 2020, as we know. So now what we're seeing is, to me, like this, we got many wicks down below here. Shooting star wick off this candle. It's not technically shooting star, it's not on the top. However, it's a bearish ascending wedge in my opinion. I would expect this really to just basically something like that, like maybe come back up a bit further, just like that. And the reason being is because we're coming into resistance and we have some untapped liquidity down here from these lows, right? So we've swept this low, hence the check mark. Okay, so swept this low, and then this is untapped areas in my opinion, where we originally had this breakout here. So basically this wick where we had the breakout, wick to back test on the wedge, and kind of consolidated on lower time frame in this area. That to me is still untapped, and I could expect us to at least come back down for a retest of this area within kind of this previous range, come back down to this base. And if you zoom out, you can see this is right where it was bearishly consolidating right on this line here, right around 63 cents was obviously our macro bottom back in July 2021. So you can just draw it out and you can see clearly that that should act as an area of significance. And, you know, with the market looking pretty weak, I could see us coming back down and retesting this, at least for now, on MATIC, but we'll have to wait and see, of course. So, that's kind of it for now for MATIC. We're seeing volume die out. It's just that time of the market where, you're not really seeing capitulation, but you're just seeing weakness across the board. Not a lot of interest, and people still hesitant to get involved. So definitely think we're going to see a longer period of accumulation, which I've talked about in my previous videos, just longer periods of accumulation before we get our next bull run. So these things take time, and we're not just going to smash right through all the resistance that we've built up over almost the last year kind of thing. So it takes time for these things to charge up. So anyways, just my thoughts on MATIC for now. Next up, we got Cosmos. So Atom here. Decent move recently right now that we're seeing, but in all honesty, we're just coming up to that upper band of this ascending channel here, and so we're coming into resistance, already starting to wick. Maybe one more green candle up to really tap it, or deviate above kind of thing. But I wouldn't be expecting to enter long in this. I'd wait for at least another retap into previous liquidity or support over here. So this ascending wedge has obviously been really nicely respected, other than this major deviation here that we had on August 20th. Clearly a fake out, right? But came right back into this green area, which is our, I've marked it out as an area of interest. I'll call it an order block on a different time frame, I think, maybe a higher time frame. But anyways, we're on the daily, and it's one of those areas where you can just see it being respected, right? So we had it here. We had it close below at the bottom here, so that's basically what formed this, is these two candles here on the higher time frame, and then nicely respecting it, right? Came back in, candle closed there, okay, acting as support, failed, came back down, tested it here, candle closed at the bottom, came back up, tested the top, came back down, resistance, okay, resistance, came back up, now smashed through it. It's resistance up here at the top of the block, came back down, closed here at the bottom of the block, again resistance, came back down, deviation below, but then came back up, acted as resistance, came back up, deviation above. Very choppy market, hard to trade, very difficult, unless you're a good scalper. Came back down, retested as support. Okay, then we finally had our breakout here, minor area of consolidation here, breakout above, tapped as support, okay, came back down, closed just at the top, and then broke down, came back inside, deviate below the ascending wedge, and then broke back inside. Okay, so just too many areas of interest here for me to say that this isn't a significant area of interest and an order block of some sort, right? So, for now, could just be more chop like this, come into resistance potentially above here, this previous liquidity up here where this wick closed on May 10th, and then also you just draw it out again. I like to draw it out to previous areas in the historic price, which basically marked an area of significant resistance for a while during this correction, and then when we finally bottomed out, this is where we had that more of a major consolidation area right here where it was acting as resistance, and then finally broke through, which marked our breakout from this market structure previously, right? So always like to keep that in mind, but basically that's what I'm seeing right now. Again, given the market conditions, this is what I would expect. So something like this until we really start to play with this upper resistance. Now keep in mind, like I said, short-term long plays need to be short-term in essence in a bear market. And so even if we came back up to this resistance, I'd be at least targeting this previous order block and potentially some of these lows, right? This liquidity, this untapped areas of these lows that I would expect to be at least swept before we either make our double bottom or our macro bottom for another bear market rally to push a bit higher, or if this depending on what the market is looking like if we break down and obviously make new lows. So time will tell, and that's all for now. Thanks.